Good morning. Thank you for joining us today for our Farm Foundation Forum, Geopolitical Disruptions, Implications for U.S. Agriculture and Trade. We are glad to have this opportunity to engage with you today and are thankful to Farm Credit for their support of this forum. My name is Martha King, and I am the Vice President of Programs and Projects for Farm Foundation, located just outside of Chicago, Illinois. Just like all of you watching, I'm very interested in today's discussion on the impact of the conflict in Ukraine to global agricultural markets, as well as the potential impacts of other major geopolitical disruptions. It's a quickly evolving picture, with the current shocks to global agricultural trade having wide-ranging effects, touching seed availability, fertilizer prices, and exacerbating existing supply chain issues, among many other impacts. In a moment here, I'll let our expert panel guide us through this complex landscape. Before we get into today's program, I'm going to take just a few moments to share a bit more about Farm Foundation. We are a 501c3 nonprofit working at the intersection of agriculture and society to address challenges that affect the entire food and ag value chain. Specifically, we are an accelerator of practical solutions for agriculture, accelerating people and ideas into action. The three levers we use to accomplish this are policy, innovation, and education. Forums such as today's are just one part of our extensive program of work, which is guided by our mission to build trust and understanding at the intersection of agriculture and society, and our vision to build a future for farmers, our communities, and our world. We rely on partnerships to fund our work and increase our impact. So if you're interested in learning more about funding or partnering with us, I invite you to reach out to explore collaboration. Now, I'd like to take a minute to highlight our Friends of Farm Foundation program. With your enrollment as a friend, you will not only be helping to support the mission and vision of Farm Foundation, but you will also gain exclusive benefits such as curated content, networking opportunities, and much more. Being a friend is an investment in building a better future for farmers, our communities, and our world. To learn more about being a friend of Farm Foundation, go to farmfoundation.org/friends. The link is also being posted in the chat. In addition to learning more about Farm Foundation and our work by visiting our website, I encourage you to connect with us on our social media platforms. If you are posting on social media about this morning's session, we ask that you please use #FarmFoundationForum. And here are some final housekeeping notes. There will be audience question and answer section at the end. We'll be using the Q&A function located at the bottom of your screen, not the chat, to queue the questions. This forum is being recorded and will be posted on our website at farmfoundation.org, as well as on our YouTube channel. We'll send out that link following today's forum. And when the forum concludes, you'll receive a link to a short survey. We appreciate your feedback and your time in completing the survey. Now let's turn to today's forum topic. We have an outstanding panel of experts who will get us up to speed on what the conflict in Ukraine means for U.S. agriculture and trade, as well as what other factors are at play. It's now my pleasure to introduce our moderator and discussion leader, Dr. Amanda Countryman, who is an associate professor in the Department of Agricultural and Resource Economics at Colorado State University and is Farm Foundation's Agricultural Economics Trade Fellow. Dr. Countryman's research examines the economic implications of international trade, focusing specifically on the impact of trade reform on agriculture. She also teaches undergraduate, graduate, and professional courses in international trade, agribusiness, and agricultural economics. Prior to joining the faculty at Colorado State, she was an agricultural economist at USDA's Economic Research Service. The floor is yours, Amanda.
Thank you, Martha. As we know, this is a time of tremendous uncertainty in the global market. Before Russia's invasion of Ukraine, the world was already struggling with supply chain challenges and inflationary pressures not seen in the last 40 years. Tight stocks-to-use ratios of agricultural commodities, coupled with high prices across the board, set the stage for continued volatility throughout the market and potential for domestic and trade policy responses that could worsen market conditions. For today's forum, we have three fantastic economists who will discuss the pressures and constraints facing the global economy. Dr. William Liefert will focus on the disruption of Black Sea grain exports. Dan Bosse will describe wider agricultural market implications, and Dr. Joseph Glauber will provide an overview of global food security concerns. We're going to hear now from Dr. William Liefert, one of my former colleagues at the USDA Economic Research Service, where he is now retired after more than 30 years as a senior research economist. He is now working as a private consultant. Bill is a career specialist on agriculture in Russia, Ukraine, and the other countries of the former Soviet Union. And he also specializes in trade and macroeconomics related to agriculture. Earlier in his career, he was an assistant professor of economics at Kent State University and he has also been a consultant with the World Bank and the OECD in Paris. I will now let him tell you more. Bill?
Okay, well, thank you for that introduction, Amanda. And I also want to thank the Farm Foundation for inviting me to participate in this forum. Just want to mention again, I am currently a private consultant, retired from the Economic Research Service of USDA, and I'm speaking today solely for myself. The title of my talk is Russia's Invasion of Ukraine, Disruption of Black Sea Grain Exports. That's the title because both Ukraine and Russia are large grain producers and exporters, mainly out of the Black Sea, and Russia's invasion of Ukraine is raising the question of how much grain will the two countries be able to export this year. Next slide, please. Here's the outline of my talk. I'll begin with some background information, first on Ukraine and Russian macroeconomies, as a basis for later discussing how the invasion and its consequences are affecting the country's macro situation, which in turn will impact their agricultural sector. I'll then examine the two countries' grain production and exports, and then present some old-fashioned Ukrainian geography. That will lead into the main meal of examining how the current troubles are affecting grain exports, first by Ukraine and then by Russia. Next slide. Ukraine's population, or I'll say Russia's population, is about 3.5 times that of Ukraine. If you looked at their 2021 GDP, Ukraine's GDP looks very low relative to that of Russia. That's because the ruble was weak last year. And if Ukraine's GDP were calculated based on purchasing power parity, it would be substantially higher. Both economies rebounded fairly well in 2021 after the COVID-induced fall in GDP in 2020, with growth at 3.5% for Ukraine and 4.7% for Russia. Next slide. Both Ukraine and Russia are big grain producers. Ukraine is one of the top corn producers in the world, with output averaging 36 million tons over the last 3 years. It is also a sizable producer of wheat and barley, and the largest producer of sunflower seed. Sunflower seed, of course, is not a grain, but I'm including it in the discussion because Ukraine and Russia are the world's two biggest producers. Russia is the world's third largest wheat producer, averaging 78 million tons a year over the last 3 years. Russia is also a sizable producer of corn, largest world producer of barley, and second biggest producer of sunflower seed. Russia is also a major producer and exporter of fertilizer, but I'm going to exclude that product from most of my discussion. If you look at exports, Ukraine's main agricultural export is corn, with average exports over the last 3 years of 27 million tons. Ukraine is also a substantial exporter of wheat and largest exporter of sunflower seed oil. Russia is the world's largest exporter of wheat, with exports averaging 35 million tons over the last 3 years. To really summarize, Russia, largest world wheat exporter, Ukraine, big corn exporter, and non-trivial wheat exporter. But what the world is really interested in, next slide. What the world is really interested in is these countries' shares in the world grain trade. Over the last 3 years, Russia and Ukraine have combined for 28% of world wheat exports, with Russia being dominant. They account for 18% of corn exports, that's mainly Ukraine, 31% of barley exports, and 77% of sunflower seed oil, with Ukraine itself supplying 50% of world sunflower seed oil exports. Next slide. What are the main foreign markets for Ukrainian grain? The two main markets for its corn are China and the European Union, while the main foreign markets for its wheat are mainly North Africa and Asia. Next slide, please. The main foreign markets for Russian grain, including wheat, are in North Africa, the Middle East, and Asia. And here are the 5 largest foreign markets for Russian wheat. Next slide, please. I now want to examine Ukraine's geography using this map. Let's begin in the south with the Crimean Peninsula, which Russia seized from Ukraine in 2014. To the northeast of Crimea is the Sea of Azov. To the south and west is the Black Sea. Ukraine's capital and largest city is Kyiv, up in the north central. Other Ukrainian cities much in the news these days, if you move due east from Kyiv, close to the Russian border, is Kharkiv, which is Ukraine's second largest city, currently under Russian attack. Drop down south, a little southeast to the Sea of Azov in the city of Mariupol. This city is also being besieged. In fact, for 2 days in a row, the main headline of the Washington Post here in DC has involved the Russian siege of Mariupol. Jump to the west along the coast there to the southwest, and you get the city of Odessa, which is Ukraine's main port. Next slide. This shows where wheat is produced in Ukraine, and it's produced mainly in the southeast and the southwest. Next slide. Corn, on the other hand, is produced kind of further north, mainly in the north central. And the bulk of Ukraine's grain exports, in fact, over 90% of Ukraine's grain is exported out of Black Sea ports to the northwest of Crimea, here called Krim. They're exported to the northwest of Krim, not to the northeast in the Sea of Azov. Next slide. Oh, actually, now please go back just a couple slides to that map, that clean map we had. There we are. The country's main river is the Dnieper, which flows through Kiev, winds, it moves east, then west, and it flows into the Black Sea at the city of Kherson. About 40% of Ukraine's area lay to the east of the Dnieper, about 60% of the west. Most of the Ukrainians who live east of the Dnieper have Russian rather than Ukrainian as their first language, though these people have not welcomed the Russian invaders. Another point about the geography is that the Great Eurasian Steppe that runs all the way to Mongolia, which is very fertile, at least initially, begins in central Ukraine, very fertile. As one moves to Ukraine's west from the central, the land becomes less fertile and more hilly and wooded. Now, I want to use this map to talk a little about what's going on in the war, because that's what's affecting grain production and trade. I personally believe that President Putin of Russia wants to conquer all of Ukraine, though he might not be able to do so. If you begin with Ukrainian territory, just in the north, down to Kyiv, and then move along Ukraine with the border with Russia, move to the east, drop down to the south, move along the Sea of Azov, and then beyond the Crimea, all the way to Mykolaiv, with this ring of territory, Russia has basically conquered this ring of territory along basically Ukraine's eastern border. The city of Mariupol is completely surrounded and is being besieged. The city of Mykolaiv is also under attack. I think that Putin's short-run objectives are first to take Kyiv and install a puppet government, and then to control all of the Black Sea coast. Okay, and in particular, he has to take Mykolaiv and then Odessa. And Russia is currently blockading by sea the Ukrainian ports it doesn't control. I think that's the objective. Kyiv and the Black Sea coast in the short run. I'll now give my thoughts as to how the Russian invasion could affect Ukraine's grain exports and new grain crop season. The situation in Ukraine is very fluid and fast moving, making it difficult to present any firm judgments about what will happen, such that I'm going to as much raise questions as much as answer them. Also, my sense is that in the short run, and maybe for the entire year, war, geopolitics, and policy will dominate commercial and economic factors in determining what happens to Ukraine's grain economy and exports. The two key questions, I think, for grain appear to be, will Ukraine be able to export its remaining supplies from last autumn's grain harvest? That's a short run question. And then, How will the invasion disrupt the new grain crop season? Well, let's go back to this map. If Ukraine gains control of the entire Black Sea coast, it'll have a stranglehold on the country's foreign trade and thereby have strong leverage on the rest of the Ukrainian economy. Russia will also control Ukraine's grain trade because over 90% of Ukraine's grain exports are shipped out of Black Sea ports. And as I mentioned, most to the west rather than east of the Crimea, just as a vast bulk of Russia's grain exports come out of the Black Sea. Other impediments to Ukraine's grain exports are the destruction of physical and port infrastructure, including even some silos, and that shipping might be reluctant to operate in the Black Sea because of high insurance premia and all the other uncertainty. Now, if you please, could you go ahead about 5 slides? What, a couple more. Stop. Okay. The first thing I want to say about this slide, USDA projected Ukrainian grain exports. I'm afraid I'm back a century. Obviously, 1921, 22 should be 2021. I'm back a century with all the years. I hope that doesn't show that I'm living partly in the past or something like that. But just with the years, jump ahead a century, okay? In February of 2022, not 1922, USDA was projecting Ukrainian grain exports for the current trade year. Trade year is for corn, October, September. Current trade year, Ukrainian grain exports of 33.5 million tons. In March 1922, just a few weeks ago, it dropped that projection down to 27.5, a drop of 6 million tons. As of now, Ukraine has already exported about 17 million tons.
William, I think you're muted.
Okay, did it just happen?
Yes, okay. You're all set now.
Okay. Ukraine has also exported about 2/3 of its previously expected export volume of wheat. In March 22, USDA projected that its grain exports for this trade year would fall from 20 down, or 24 down to 20, a drop of 4 million tons. I think it's fair to say that these March export projections are on the conservative or optimistic side. Now, the question of how much the current troubles, or how the current troubles will affect Ukraine's new crop season beginning this spring is even more difficult to answer. Depends on what happens concerning the war. There are 3 general scenarios. The first is that Ukraine maintains control over all or most of its territory, probably as a result of a negotiated peace. The second is that Russia conquers all or most of Ukraine. And the third is that both Ukraine and Russia control a sizable part of the country. Even if there's no continued fighting or insurgency to disrupt production, the Ukrainian grain economy will suffer from major harm to, and some degree disruption of, the country's physical and commercial infrastructure for grain and agriculture. Obtaining inputs, especially seeds, which are important for the Ukrainian grain economy, obtaining seeds could be particularly difficult for farms, though at least a lot of these inputs could be imported from Europe to the West by rail rather than by ship through the Black Sea. Could you go back 1 slide? I changed my organization around a little bit since I submitted my slides a few days ago. Ukraine's grain and overall agricultural economy will also be affected by the price shocks the invasion has generated. Though again, at least in the short run, war and policy will probably govern matters more than prices and economic incentives. The invasion has resulted in a surge in world grain prices, which increases incentives to produce and export if one can. Since the invasion, world wheat prices, they're fluctuating a bit, but they've risen by about 1/3. Corn prices have risen by about 1/4. Also, since all the trouble began, Ukraine's currency, the hryvnia, has depreciated against the dollar by about 12%, has also depreciated against other currencies, which enhances the export price competitiveness of Ukrainian grain. On the other hand, agricultural input prices are also rising. World oil prices are very volatile now. They quickly spiked after the invasion. then they fell substantially. Now they're rising again, and they'll probably be higher during the year by a non-trivial amount than before the attack. Fertilizer prices are also increasing. And the depreciating hryvnia further raises the prices of imported inputs to grain producers, making depreciation a mixed blessing for agriculture. Ukraine grows virtually only winter wheat, so at least that was already planted last autumn. Its barley is about half winter and half spring. Corn and sunflower seed are both exclusively spring crops, and that planting will begin in April, May, depending on the weather. A preliminary assessment by the Food and Agriculture Organization is that because of all the difficulties, 20 to 30% of area for Ukrainian winter wheat, corn, and sunflower seed for the 2022-23 season will either go unplanted or unharvested, and that yields will also be negatively affected. USDA will let its thought be known on both the Ukrainian and Russian crop sectors for the coming year in its May WASDE release. Next slide. Oh, 2. Here we are. I'll now turn to the effects of Russia's invasion on that country's grain economy and exports. This discussion is a bit easier than for Ukraine because Russia is not a battlefield. However, Russia's economy is being hit very hard by the severe economic sanctions that the US and other Western countries have imposed. And these sanctions have the goal of cutting Ukraine or Russia off from the international financial system and world trade. And here are some of the negative effects of those shocks. The Russian currency, the ruble, has depreciated by about 18% since the invasion began. The Russian stock market has crashed. The red has crashed by about 80%, crashed right away within days, and it's been closed for about 3 weeks. There's been major capital flight, Western business flight, and some human capital flight out of Russia. The human capital flight results because, some educated and skilled people opposed the invasion are leaving the country. The expected consequences of all these shocks are both deep recession, maybe even a depression, and high inflation. Dual macro problems which put policymakers on the horns of a dilemma, because if policy combats one of these problems, it can exacerbate the other. A survey of economists conducted by the Russian Central Bank predicts that Russian GDP could fall in 2022 by 8%, compared to 4.7% growth in 2021. High inflation will result largely from the ruble depreciation and other sanctions-induced disruptions to the economy. The same survey predicts that inflation in 2020 will be 20% compared to 5.9% in 2021. In the longer term, if the conflict continues, the financial and human capital flight and being cut off from Western investment in business partnerships will not bode well for Russian technological progress and productivity growth in agriculture as well as the overall economy. Next slide. How will the war-induced price shocks affect Russia's grain economy and exports? Well, like Ukraine, Russia's incentive to export grain has also increased substantially from both the surge in world grain prices and ruble depreciation, the latter, of course, also increasing its export price competitiveness in world markets. However, also in Ukraine, agricultural input prices, especially for fuel and fertilizer, are rising substantially, both because those world prices are rising and also because of the depreciation of the Russian ruble. Next slide. Russian grain exports could also be affected strongly by policy interference. In the past, Russia has often restricted grain exports when grain prices rose substantially in order to mitigate food price inflation, especially for bread, and also help the domestic livestock sector. And the Russian government is currently considering such export controls again. Russia is also beginning to restrict its fertilizer exports. The Russian government could also conceivably enact a grain export ban or embargo as an economic weapon, as it has in the past with energy exports to Europe. Now, I think that Russia is less likely to import a grain export ban for its own grain exports, which go mainly to the Middle Eastern, North African, Asian countries. But if Russia controls Ukraine or its Black Sea ports, might it consider banning Ukraine's corn exports to Western Europe? Western sanctions might also hinder Russian grain exports. In particular, could the exclusion of Russian banks from the SWIFT network for international bank transactions impede payment to Russian exports by foreign grain purchasers? However, since both Russia and Western countries might want Russia to export its grain, if that trade is initially hurt in this way, the Western countries might want to exempt from the SWIFT sanctions the banks that handle Russia's grain trade, as it has already exempted the Western banks that handle Russia's export of natural gas to Europe. Next slide. Here are USDA projections for Russian grain exports I'll jump ahead a century, in 2021-22. In March of this year, just a few weeks ago, USDA recently lowered its projection for Russian wheat exports for the 21-22 trade year by 3 million tons, down from 35 to 32 million tons. There was little change for Russia's other main crop-related exports, but when they give their new release in a month's time, there might be bigger changes. Next slide. Here are my concluding thoughts or questions, as to what will influence future events. The first question is just, how long will the fighting continue? For Ukraine, question is, how much of Ukrainian territory will Ukraine and Russia each control? And in particular, what will be the consequences for Ukraine's grain exports if Russia holds its Black Sea coast? For Russia, I think the key policy question is, might the country restrict grain exports? Could do that to counter food price inflation and protect its livestock sector, or could do it as part of economic warfare with the West, such as preventing Ukrainian corn exports in the EU if Russia controls Ukraine. Also, might Western sanctions hinder Russian grain exports because of payment difficulties? Last slide. Then the last question is, what are the impediments to grain production exports, even if policy does not hinder or prevent trade? For Ukraine, the invasion has harmed the egg sector's physical and commercial infrastructure. Russia, the egg sector, is being hurt by Western economic sanctions. Also, both countries' grain economies will be facing shocks to input prices and supply availability and extreme uncertainty about the geopolitical and commercial future. Okay, and that concludes my talk.
Thank you, Bill. We already have some great questions in the chat that we will get to at the end of our presentations about grain production in Ukraine and Russia. So thank you, Bill, for that great presentation. Now we are joined by Dan Bosse, founder and president of AgResource Company in Chicago. Dan is an economist in the commodity business since 1979 and is the vice chair of the Farm Foundation Board of Directors. He has worked with Professional Farmers of America, Brock Associates, and the Ag Research Division of GNP Commodities in Chicago. Dan, we look forward to your insights on this topic. Please take it away.
Well, thank you, Amanda. Bill, well done. And, I think all of our hearts and our thoughts go out to the people of Ukraine. And I just want to speak for Bill and Joe and myself that indeed we need to be reflective upon the 4 million that have been moving to other countries and the 10 or 12 million that have been affected by this terrible war. Unfortunately, in agriculture, when there's an event of adversity, it affects everybody up and down the food chain. And so I'd like to talk just a little bit about what this means to the marketplace and how disruptive this could be. To Bill's point, a lot of this is all due to the duration of the war. We at AgResource have been modeling it out in chunks, as I call it, every 3 months, trying to understand the overall impact to the marketplace for consumers, farmers, and of course, importers longer term. Next slide, if you would. So what are some of the market implications? Well, this is the biggest supply shock that we can find looking backwards in our data to 1914. That's 108 years ago. On a caloric basis, we've modeled out that this is about 11% of the world's annual consumption. So a very big event. Ukraine trade is halted right now, ag trade, due to self-imposed export ban. And of course, the bombings that are going on at some of the ports, where it's Mariupol or recently in Odessa. And NATO members have placed biting economic sanctions on Russia and their SWIFT banking system, but there is still grain that's leaking out from Russia. There's about 8 or 9 cargoes being sent this week. The Azov Sea is closed, but we are estimating that Russian grain exports may be cut by 66% due to acute finance, insurance, and freight difficulties. Next. Annually, the Black Sea accounts for 29% of world barley production and 80% of world sun oil trade. That's about 4.2 million metric tons, but it's the duration of the war that determines the bullishness for grain and food prices. A war that extends to June would be catastrophic for the spring crops of world corn and veg oil, sunflower. Thankfully, Russia and Ukraine have planted their winter wheat crops and winter barley, and they're generally in good condition. The question is, will they be harvested? We have clients in Ukraine, and of course, as we talk to them, the biggest issue is finding their workers, finding diesel fuel. They have, it seems, about 70% of their seed and fertilizer. The question is, can they get it in the ground? And we'll be looking at that very carefully as we head into the spring. Next. An ancillary to this big problem in the Black Sea has been South America. You know, unfortunately for the world, they are coming off their worst drought in decades. It looks to AgResource Brazil, a company of mine, that they've lost about 38 to 40 million metric tons of soybeans, with Brazilian soybean production now coming closer to 120 million metric tons and probably 18 to 22 million metric tons of corn. So it's not only the wrath of President Putin, it's also the wrath of Mother Nature in South America that catches the world extremely short of the summer row crops, corn and soybeans. And by the way, vegetable oil supplies are also quite low. So the world is rerouting agricultural trade. India and Brazil are now looking at exporting wheat. India doesn't seasonally or annually export all of that much wheat. The EU is stepping up, and there's meetings ongoing today in Brussels looking at the opportunity for maybe GMO corn into certain countries like Spain. This is rearranging the deck chairs, and all we can hope for is that Mother Nature is kind to the Northern Hemisphere as we get into a new growing season. Next slide. What has happened to the world markets as we look backwards in time and at least try to gauge what this has meant through today? I put here world FOB prices of corn, wheat, and soybeans, and you can see the acceleration to the upside, in particular of wheat and soybean prices as we look back to the middle of February. And so we have been in a bull market generally looking back to 2020, but boy, this has been an acceleration with world wheat prices now sitting at a record high, $480 to $500 a ton. Next slide. When we look to the United States and we start looking at basis relationships down at the Gulf, we can see where the real export demand has been coming for US product. Gulf corn basis has risen sharply as there's been strong demand as cargoes have been shifted from Ukraine to the United States. And the same being in soybeans, as the Chinese now understand how small the Brazilian soy crop is and that they need to be buying additionality in US soybeans. Again, this morning, another large sale of US soybeans to an unknown destination. We believe it to be China. The chart in the middle shows you that, at least for now, the world has not come for wheat. It has been really a story of corn and soybeans. Wheat may be second fiddle, if you will, for now, but the EU, India, and maybe our friends in Brazil and Australia are filling that demand today. If the wheat demand comes to the United States, we really see it in a position of new crop, not so much an old crop. Next slide. The marketplace has been absolutely stunning here in Chicago, as you can imagine. The chart on the left gives you option volatility rates. Some people call it the Greeks. This would be the cost of an option. In other words, how much does an option, a put or a call, really cost you in Chicago to maybe be looking at a flat price position? You can see that in the case of wheat, where prices were going limit up and limit down daily after the war, the volatility rates got up to 80%. This is unprecedented. We just can't find anything like this in history. And when you look at monthly Chicago wheat prices, you see that in the chart to the right. Never before have we seen a $4 range in wheat in a matter of 10 days. And so this has really been a significant impact on the world market. Now, for consumers, if you think about it, you know, there's about 8 cents of wheat in a loaf of bread. So if that price of wheat doubled, we're talking about 16 cents. That may not affect you and I, but for those that are impoverished in the world, those 800 million that do with less, that will be a big deal for them in terms of their percentages. Next slide, please. Now, thankfully, through all of this, at least according to USDA data, world major grain consumption is still increasing. Even during the pandemic, to set the stage, that demand has been relatively strong, growing at 1.8% annually. So there's no evidence today, at least, that corn, soybean, and wheat prices are causing any acute demand rationing. Next slide. But I want to point out to everybody that we believe at AgResource that when we look at stock use ratios, it best correlates to world prices in terms of stock use ratios of the major exporters. This is where the grain supply is centered, and this is where the availability is to importers and consumers. When I look at world stock use ratios of corn, soybeans, and soybean meal, you can see that we're sitting at record lows. And so this supply disruption produced by Putin's aggression against Ukraine catches the world at a position of supply shortages, at least of the major exporters. Next slide. Talking a little bit of what has happened in South America, because I do think it's important, although this is the Black Sea Conference, I think having that holistic view of agriculture is always important. We look back at the Brazilian growing season, you can see that on a percentage of normal from November 15th through March 15th, notice that big landmass of southern Brazil and Argentina that did with deficient soil moisture. And then if we look at the GRACE root zone soil moisture drought indicator from NASA, you can see that same dryness that is evident. And this is why the South American crop struggled and that we lost about 1.4 billion bushels of soybeans, equivalent to about 25% of the US harvest this year. Next slide. Putting that into perspective, I want you to go back historically on the chart to the left and look at how that stacks up between Paraguay, Argentina, and Brazil. This is where that 38 or 40 million metric tons of loss really stands out. And then if you look at changes in South American production in terms of a percentage term, you can see that we're against that old record high of 2008 in terms of 1990 in terms of loss of a crop. It's going to end up being a little over 16%. And so this really was a drought of significance. Next chart. And so what does this mean to the US soybean market? Because this has implications for sun oil and all the other vegetable oil crops. So USDA today is projecting that US soybean exports will be down, year on year. However, as we are starting to see China and other buyers buying greater numbers of US soybeans, our modeling would show that that export number from Brazil needs to be adjusted downward, maybe to 73 or 74 million metric tons from USDA's 92. And if you look then on the export forecast for new crop, we're fully expecting next year that the US will export a record amount of soybeans, 2.35 billion bushels, which will be significant as it depletes stocks going forward. Next slide. So the question we always get is Chicago right? And is Chicago doing the job that it needs to do? So if we look at G3 soybean stocks to use ratio, we are sitting at a 37-year low at 51%, the chart to the left. Notice that when we look at April 1st, this is the measures that will be evident to USDA and to the marketplace. Then if we take it to the chart to the right and model out what it means to stock use ratio on a price curve, you can see it forecasts that at some point the soybean market probably needs to make new all-time highs above the 2012 high of $18. We're not there today. Today we're sitting at $17, but that upside potential is still there within the soybean market. So when we think about the pillars of the food table, it's corn, soybeans, and wheat, the soybean market is running on empty as we see it today. Next slide. Now talking a little bit more about the Black Sea. And again, February export data is available, but I'm not sure we want to trust it, at least for that part of the world just yet. But I did want to give you the indication of combined Ukrainian and Russian corn exports by month. I guess what I mean to say here, if you look at whether it be corn or whether it be wheat, if you were going to start and have a disruption to supplies within the Black Sea, the time frame of March, April, May, and June would probably be the best. Now to the world, if there's a time that you want to see the conflict be over, it's when we get into that new crop wheat in Black Sea in terms of June, July, August, September, and October. Notice in the chart to the right that in some of those months, combined Russian and Ukrainian wheat exports are 8 or 9 million metric tons a month. And this is a big deal for the market. Today, India can step in along with a little bit of Brazilian exports, along with Australia, maybe some from Canada and the United States, and of course the EU. But the timing of getting this conflict done with by June will be very key as we think about the markets going forward. Next slide. As you look at what's going on in Ukrainian and Russian wheat exports, and you can see USDA's forecast there of combined Notice how they have become such a big factor in the world markets, looking backwards only 10 or 15 years ago. Russia is the world's largest wheat exporter, Ukraine number 5. Our forecast for the year ahead is that combined, maybe these countries will do 22 million metric tons, 22 million metric tons of wheat. We say that because, to Bill's point, you can rail out 600,000 tons of grain to the east from Ukraine. That's about their capacity. And then in terms of Russia, we're still seeing cargoes that are loading and sailing outside of the Azov Sea, further south, Novolinsk, in some of those areas. And then you would imagine that as more Russian grain gets bottlenecked within Russia, you would think that Russian wheat and flour prices would be declining, but that has not been the case. Flour prices are sitting at record highs today. And that's kind of peculiar if you think about it, but I think it's related to the inflationary pressures that Bill talked about in the value of the ruble and what's going on in the Russian economy. People are reaching for things like food and other products to line their shelves because they're afraid of what's coming down the road. Next slide. As I mentioned, the Indians are now expected to step up and be larger wheat exporters. India has had a large cache of wheat that maybe isn't of the best quality, but saying that, the world is hungry for wheat and they are looking for opportunities. And so we've seen a lot of activity in the Indian wheat market. Notice that this year, India will probably export a record amount, 8.5 million metric tons. USDA is at 7, and next year, that number could be 10 million metric tons. India has been blessed with good weather. They will be harvesting their wheat crop in another 30 to 45 days. It looks to be record large. And this is a release valve to some degree for the world market. On the other chart, you can see here that EU wheat exports have been seasonally declining. And so the EU is also in a position that it will have extra wheat to be available to world importers. So the world will first turn to the Europe, India, and then of course, we'll see a little export out of Brazil. But these are the countries that are stepping up, at least until we get into that big demand time frame of June, July, and August. Next slide. So if we look at where world wheat stocks to use ratios are, and I chunk it, as I said before, let's say we chunk it up until the period of September, and we look at stock use ratios of the major exporters. I put the world less China, the Black Sea, and exporters less the Black Sea. You can see that even with normal production in the upcoming crop year, we are going to see record low stock use ratios of the world's major exporters. Now, on the other chart, you see the modeling that would go behind this. If that is indeed the case, the market has a job to accomplish in terms of how high prices may have to reach. In terms of Gulf hard red winter down, and let's say Galveston or somewhere in the Gulf, you would see that price nearing $535 a ton, somewhere around $14 a bushel. You would see corn prices rising up to about $4.30 a bushel. That's above $10 a bushel, at least from an export perspective out of the Gulf. Next slide, please. However, if I assume that the Gulf or our friends in Ukraine and Russia will either be diminished or closed for the remainder of the year, I'm now talking about the calendar year 2022, these numbers rise even further. You could maybe look at Gulf HRW making it up to a high of something like $16 or $580 to $600 a ton. Corn may make it up to $440. Now that's $16 to $18 on Kansas City wheat spot basis. So there is still a fair amount of upside in the marketplace, but very key will be the duration of this war. How long does it last, and when can export availability come back in more abundance, at least from the Black Sea? Next slide. If you look at Ukrainian corn production, as Bill said, last year was a record year of production of 42 million metric tons. By our assessment, and there's a lot of moving parts here, I want to caution everyone. Some are talking about corn production or seedings being down 30%. Some are talking being down as much as 80%. It is all over the board depending upon who you talk to. Our estimate is we're going to be down around 50% or almost that at 22 million metric tons. But as you look to the chart to the right, domestic corn use in Ukraine is somewhere between 7 and 11 million metric tons. Now, I believe that 11 million metric tons is higher from USDA because there will be some additional spillage and loss, and maybe there'll be a little extra consumption. But the point I want to make is Ukraine can get by on their corn crop with what's in stocks today. Next slide, if you will. Ukrainians' corn stocks are estimated by USDA at 13.8 million metric tons. If domestic use is set 7 to 11, it doesn't have to produce a corn crop this year to have enough supply. This may cause some Ukrainian farmers to think about, well, maybe I shouldn't be producing a crop that's heavily exported. Maybe we should be producing food grains such as lentils or peas or other things. But the problem we're having in that assessment is, are the seeds in position and available for Ukrainian farmers to go forward? Next slide. So because of the war that has just started, the impact nearby is that Ukraine will probably not export about 7.1 or 7.2 million metric tons of corn that were slated to leave in March and April. You can see that total in the graph to the left. On the right is where our estimates are for exports out of Ukraine, at least looking at this year relative to USDA, and of course, then looking forward to next year. That 4 million metric tons, again, assumes a closure of Ukraine for much of this calendar year. Again, a lot of that would just be Eastern rail transit, assuming that Odessa and some of the key ports are too badly damaged to be brought online anytime soon. Next slide. One of the biggest customers of Ukrainian corn is China. This is monthly corn imports on the left, in which you can see Ukraine, United States, and others. Notice in January and February how predominant the Chinese were in terms of exporting Ukrainian corn. We estimate that there's still about 6 million metric tons of corn that China had purchased that will not get exported in the period from March, April, May, June, and July. So this corn was demanded by China. We think some of that may shift to other destinations, principally the United States. China does not have phytosanitary agreements for Argentinian or Brazilian corn, so it likely will come to the US, but so far we've not seen the likes of China in an old crop position. They have made purchases long ago, but we are not seeing them step up to be a big buyer, but it's something to watch very carefully as we head into the spring and summer. Next slide. So if we look at taking Ukraine out, in other words, I'm doing the same exercise of world less China and Black Sea, and Argentina, Brazil, the United States. Let's call them the G3 or 3 principal exporters today. The corn balance sheet globally on a stock use ratio even becomes more bullish than wheat. And so under this scenario, you would look for corn to rally to something like $10.90 from a Gulf position. And so the outlook for corn, December corn is sitting today at around $6.60 a bushel. It could still have considerable upside if you wanted to assume that the war in Ukraine will be lengthy, which takes the Ukrainians out of the export market in a new crop position. Again, very, very low stocks to use ratio. And this places tremendous importance on that winter corn crop in Brazil, and of course, the US corn crop here in the United States in the upcoming growing season. Next slide. Lastly, I thought I'd talk about the United States farmer, and it says its prominence at the world food table as we all head to planting season in about 2 or 3 weeks. The March 1st estimate of profitability, even with these higher input costs, is that US farmers are looking at about $300 an acre in terms of corn profitability. On soybeans, $153, $54. And so we are looking at the marketplace encouraging US farmers to do their share, to plant fence row to fence row and produce as much as they can. In fact, we can look at corn futures all the way out to 2025, and we're sitting at or above $5 a bushel, something that has never happened before. Next slide. Lastly, I just want to end in terms of the marketplace. I've gone through and showed you how tight the world is going to be on grain, that this is indeed the biggest supply dislocation we have seen looking backwards since World War I. And God forbid if we have a weather problem this year, because I'm not sure how Chicago would be able to handle it. Already in Chicago, we're seeing extreme price ranges. We're seeing volatility rates of options that are very high. If we got into a summer drought, the markets would get to kind of an accelerated bull phase that would take obviously corn, soybeans, and wheat to new all-time highs. Next slide. Lastly, the Fed's, how should I say it? The Fed's job of combating inflation will become more arduous with rising food prices. We expect that the CPI or inflation rate won't reach its peak until sometime in June or July, nearing 9 or 10%. We also correlate here the CRB, which is a basket of 28 commodities against the CPI. And notice how the commodity markets have done a relatively good job of forecasting that CPI on a monthly basis. And so it's really a big job ahead for the US Central Bank, which is maybe why Goldman is talking about 2 half-point interest rate hikes in the next couple of meetings. Next slide. And with that, Amanda, I want to thank you, and we'll take questions later and turn it back to you.
Thank you for that comprehensive overview, Dan. We really appreciate it. Our final speaker before we go to the audience Q&A session is Dr. Joseph Glauber, Senior Research Fellow in the Markets, Trade, and Institutions Division of the International Food Policy Research Institute in Washington, D.C. His areas of interest are price volatility, global grain reserves, crop insurance, and trade. Prior to joining IFPRI, Joe spent over 30 years at the U.S. Department of Agriculture, including serving as chief economist from 2008 to 2014. As chief economist, he was responsible for the department's agricultural forecasts and projections, oversaw climate, energy, and regulatory issues, and served as chairman of the board of directors of the Federal Crop Insurance Corporation. I'll let you take it from here, Joe.
Thanks, Amanda. No, it's great to be here, and I really appreciate it. My job's been made so much easier by having Bill and Dan go before me, particularly Dan's excellent presentation. I was at USDA and chief economist during the food price spikes in 2007-8, and again in 2010-11, and then with the drought in 2012-13. But this feels a lot different. And what I'm going to do is going to go over a little bit what has been talked about previously, but that's going to be very fast, and then really get into sort of what the implications are for these high prices and tight stocks for the rest of the world. I have listed my co-author here, David Laborde, who's been doing a lot of work with me on this, but let's move on to the presentation. So again, this is what Dan was saying. Even prior to this Russia's invasion, we had very, very high food prices as measured, and I should say commodity prices. These aren't food prices, these are commodity prices. So looking at corn and wheat and soybeans and other grains. Dan mentioned vegetable oils, and I think that's something that we're going to see here is that vegetable oils actually are quite tight. Those prices have increased substantially for a variety of reasons. Next slide. And then, as Dan said, just the enormous run-up over the last 3 weeks. It's just incredible with limit moves all over the place, the volatility levels so high, all of that very well covered by Dan. Next slide. And Dan went through a lot of these drivers, but again, China's been in the market. We here in the U.S. we look at phase one and think, gee, what a great deal phase one was. China's been buying from everyone. They've been buying, everyone's exports to China has been up over the last year. So Ukraine, a lot of corn, a lot of grain coming out of other areas, Brazil, obviously, with a lot of soybeans. And then you go into the supply problems that we have had. We had the drought here in the Northern Plains in Canada last year for wheat. We've had drought across a lot of the Mid-East. So you look at countries like Morocco, which have suffered large losses to their wheat crop. And then, as Dan said, the big news on the market has been what's been going on in Brazil over the last 3 months or so. And with now looking at what the second crop of corn will be, hopefully they'll have a better crop there. But again, concerns. And then palm oil, which again harkens back to the vegetable oil market. We had a typhoon in Malaysia last year that had some impacts there, drove prices up. And then, so I'm calculating my inventories a little differently than Dan, but very similar story. If you're looking at just major exporters, I would agree with Dan, and particularly if you exclude Black Sea, very low levels of available stocks. And what I'll get into at the end is also the rise in input costs. So things like fertilizers, because fertilizer, unlike grains, you know, there's just a handful of countries in the world that produce fertilizers. And so as a consequence, a lot of the fertilizer that's consumed in the world is imported. And so when you look at that, then you have to focus on the large importers. And what do you know? Russia is one of the large importers. So we'll get into some of those implications in a moment too. Next slide. So again, depending on how you calculate this, we get very similar numbers to Dan. We get closer to 12%. I think we have a broader base of agricultural products that we're considering in terms of our calorie counts. But again, Black Sea, very important to the rest of the world. And if you look at the level of you know, how important these are for specific commodities, again, this is what Bill went over. Just, you know, very important for wheat, very important for corn, very important for things like sunflower oil. Next slide. So when you start looking at where that grain is going, Bill talked a lot about Ukraine and how much in Russia and how much of that went to North Africa and the Middle East. These are the most proximate markets, and so it's and they are huge consumers of wheat. You know, wheat is making up more than, in some cases, more than 50% of calories consumed, or between 40 and 50% of calories consumed within those countries. They're importing well over 50%, oftentimes as high as, in some cases, as we'll see in a moment, almost 100% of their wheat needs. So, and most of that being sourced from the Black Sea. Next slide. So let me talk about a few of the countries. Next slide. So here's just focusing on 3 different countries in the Middle East. And I think that again, here I'm considering Russia and Ukraine combined, because I think that's important. If you're, and I'm sorry, looks like as we moved over to the new formatting, it's hard to read the Ukraine, but you can do the math. So a country like Egypt, over 50% of the import, or the calories imported, are coming from Russia and Ukraine, primarily Russia in that case, but still Ukraine an important source. Yemen, more like 22%, Lebanon 34%. But again, you can see across the world how important these countries are in terms of imports. And these are primarily grain, although we'll see vegetable oils are important as well. Next slide. So in the short run, we look at the vulnerability of a given country. We're talking about dependency on key products at a specific moment in time and from specific sources. And in the short term, of course, we see prices moving all over the place. So this isn't, even though we're talking here about the North Africa and Middle East for some of these countries, everyone's seeing higher wheat prices right now. And so even a country like Mali or whatever that imports a little bit of wheat is paying more for it. So the question is, how can the country is able to pay that food import bill? And of course, that's going to depend a lot on terms of the GDP in that country and other sorts of things. And then the exports themselves, obviously, there's a lot of, we're looking at countries deciding how important a commodity might be to consumption in that country, looking at how high the prices are and what the impacts on income. Because in some cases, actually higher grain prices are going to help farmers within that country, obviously, and we've seen that certainly in prior episodes like 2010, 11, or 2007, 8. We actually saw in some areas farm income actually going up in parts of the developing world. The other big thing that is a little different from previous big run-ups like 2007, 8, and 2010, 11, when we had actually a fairly weak dollar in the US, so commodity prices were up. Here we're talking about it because of the war, actually the dollar is very strong. So if not only are prices up, you're also, if you're a country that's buying in dollars using your local currencies, and your currency is weakened substantially with the dollar. It's gone up even more. And I think that's an important thing to keep in mind here. And then the other big thing, which is more of a longer term factor, but I think one that we're particularly concerned about, is fertilizer markets, what's happening there. And there actually, I think, it's sometimes when we're talking about, well, I get calls from the press and others, I'm sure Dan and others do too, that people say, well, are we going to run out of wheat? Well, of course, we're not going to run out of wheat, but there are going to be, we might see prices extremely high, like $18 a bushel, as Dan pointed out. And I think with fertilizer, on the other hand, there actually could be some availability issues of just getting, for some countries, just being able to actually source that, because they're coming from so fewer sources, and for countries that depend on, say, Russia or whatever, or Belarus for inputs, that may be a much bigger problem, trying to source from alternative areas. And then again, from our standpoint, then the question is, well, how does this, from IFPRI's standpoint at least, how does this affect actual household income and other factors? Next slide. So if you, again, getting back to those three countries I mentioned, you can see the import share in calorie consumption. I mentioned that very, very high for these countries in the MENA region, particularly for wheat, where you're talking, in some cases, Yemen, it's almost 100% of their wheat needs are met by other from foreign suppliers. And again, in the case of something like Yemen, not all from the Ukraine and Russia, but again, these are very, very important suppliers. And then again, in terms of total calorie consumption within the individual countries, that can be quite high. And you get, these areas where you're looking at per capita wheat consumption of sometimes as much as twice that of the US. Particularly if you, these exclude food loss, but if you look at include food loss in there, you're talking about per capita consumption closer to 180 kilos per person per year. Just incredible numbers compared to other parts of the world. Next slide. And then, so some of this is timing in terms of when these countries, which again are large importers, they tend to buy pretty evenly throughout the year, a little bit more in the first quarter. Country like Egypt, that may decline a bit before their harvest comes in. Egypt actually has some sizable wheat production in the Nile Valley. But if you get, essentially you're talking about a country of 105 million people. So they are needing to import a lot. And so you can see sort of across the board where these, how important Russia and Ukraine are given each quarter. And so again, loss of those markets is going to have a substantial impact and will cause these countries to source different, look for different sources. The Minister of Supply of Egypt just at the first part of February was talking about said that they held sufficient stocks to get them to harvest, but that's going to really depend. And I think Yemen, the situation is much more hand to mouth. Next slide. So you can just see that just looking at the price changes, what that has meant for the additional food bill for these economies. And you can see just in terms of their GDP, for a country like Lebanon, which is a fairly wealthy middle income country, obviously with its own set of issues and everything else, it's a much, the increase in food, the import bill is a lot less than or at least a much smaller share of their overall GDP than in a country like Yemen, where it's so dependent, is such a poor country, has had serious civil war problems of its own, imports 100% of its wheat, consumes a lot of wheat. And there, I think, you're really talking about depending very, very heavily on things like humanitarian aid. Next slide. And here it just gives you some quick look at the World Food Program sourcing for Yemen. So you can see that they buy from a whole variety of countries. And I think here, you know, some of it, World Food Program, by the way, does source a lot of wheat and other things from the Black Sea. But you can see that you know, they buy from a whole variety of countries, but things like fortified wheat flour, they may buy a lot from Turkey. You see, Turkey is a very big source for Yemen. While Turkey, on the other hand, is sourcing a lot of their wheat itself from the Black Sea. And so I think that's where you have to focus not just on the bulk grains themselves, but also the products, things like fortified wheat flours and other types of sunflower oil and other things are coming from third parties that are producing these things. So milling operations in Egypt or United Arab Emirates or Turkey, but they in turn are sourcing from the Black Sea. So I think it's important to consider the value chain. Now I'm going to switch and start talking a little bit about fertilizer here. And again, just to echo again the fact that fertilizer, unlike say wheat, where wheat you can go to South America, or you can go to Argentina or Australia or the US or Canada or the EU to source wheat outside of the Black Sea region. With fertilizer, it gets, you know, it's far more concentrated in the hands of a few countries. And yet, if you look at overall how important imports are, I think something like 29% of the urea that's consumed in the world is imported, which is, that's pretty high relative to a lot of grains and other things that are traded. Phosphates, though, are almost 50%. So, you know, you're talking about a handful of fertilizers coming, fertilizers coming from a handful of countries. And then potash is almost 80% of imports. So of consumption is made up by imports. So again, very, very important. And Russia turns out to be a very, very important exporter of this. Now, Russia's important for a variety of reasons, not just imports, but because of the natural gas in many parts of the world, like the EU, like the US and others, is a big important food feedstock for the production of nitrogen-based fertilizers. So the EU already has had seen natural gas prices go through the roof. They've had to, reports out over the last 2 or 3 weeks is that a couple of major fertilizer operations there have shut down because of high prices. So I think that's important first and foremost, but the actual export of fertilizer, Russia is in terms of nitrogen-based fertilizers, is #1 in the world, accounting for about 15% of market share. For phosphates, it's second in the world, accounting for about 17%. And for potash, it's about 21%. And if you throw in Belarus, which is also important, you're talking about almost 40% of that market. So you can see here in this slide, looking at what share of fertilizer for nitrogen-based fertilizer, then looking over it at potash or potassium-based fertilizers. And you can see countries like in West Africa, a lot in West and Central Africa, very important. Brazil, obviously, an important importer of fertilizer. So all these things, the question, I think the longer term questions to me is, to what extent sanctions ultimately affect fertilizer? We already have, Belarus has essentially been locked up, actually predating the current crisis, but back to the downing of the Ryanair jet last year, that they've been unable to move product to the Baltic Sea where they normally would be exporting. And so I think that this is a concern. There's a very immediate concern in Ukraine itself about whether or not they're going to be able to get fertilizer for the upcoming crop year. Again, it may be the least of their worries right now, but that too is a concern. But if you look around the world, we also have had export restrictions. So China has had a ban on phosphate fertilizer dating back to September 2021. And so these, we're already seeing a lot of stress in the fertilizer market. And so there's real concerns or that some of this could come back to really affect things like rice and production. And rice prices, to date have been very moderate. I think compared to the other grains, calculating of rice stocks of major exporters, we're probably at the highest level in the last 20 years. But these are concerns, and how much fertilizer problems could slip over and start affecting productivity, because obviously in places like sub-Saharan Africa, the yield gaps are very large. There's problems trying to get yields to increase yields there, and loss of fertilizer, or having fertilizers essentially too expensive to purchase, or purchase without a lot of subsidies from governments, is going to put additional stress on those countries, and particularly at a time when many of them are still in, or at least recovering from 2020 and 2021 bouts with dealing with COVID-related economic downturn. Next slide. And here I just wanted to talk about inflation rates, because again, these are inflation rates, again, prior to the Russia's invasion of Ukraine, very, very high. We know in the US, the highest level since 81. Dan did the nice chart showing the CPI relative to the CRB index, and showing that this will likely continue at least. I think most analysts were talking about prior to the invasion that these things would moderate over time, that by the end of the year, we may be back actually within sort of more historical levels of inflation. I think all bets are off now because of this one, just the great uncertainty over the amount of crop that potentially the winter wheat crop that will be coming on market in June, July worldwide, to see what sort of response we may have there. But then overall, just the levels of inflation that we see in areas like sub-Saharan Africa and other things. I mean, obviously a lot going on in some of these countries that go way beyond just food prices. So macroeconomic problems that we've seen in Argentina, other things. But what I'm afraid of is that, the real danger for me, and I'll get into this in my next chart, is more looking at what could potentially happen that could worsen the situation. So next slide. And next slide after that. And I'll conclude with this, because I think there's a whole host of things that people could do that really make matters worse. And I would put that first and foremost, I worry about trade sanctions, that they actually will disrupt food. I think we're already seeing, again, as articulated by Dan and Bill before me, talking about how Russia's exports of grain will be affected this year. I think to the degree that it's tough, because obviously with sanctions, what you want to do is make it painful for the aggressor and make them reconsider what they're doing. But I think here a case of sanctions against food and fertilizer have implications for others. And unfortunately, a lot of them touch some of the poorer countries in the world. And I think that one needs to be very careful about that. The other big thing I think is we unfortunately have seen this in 2007-8 and also 2010-11, and a bit during COVID as well, are just countries putting on export restrictions. And I'm really happy to hear Dan's comments that India will be a potential big supplier of wheat. That would be a great thing. Unfortunately, during 2007-8 and 2010-11, they actually put export bans on both rice and wheat, and which contributed a lot to the kind of increases of prices that we saw at the time. And export restrictions, unfortunately, are really contagious. I've said this a million times, but it really is like watching a football game and having the row in front of you stand up. You have to stand up too to see the game. And what we saw a lot, particularly on the rice market in 2007-8, was that once one country put on an export ban, another big exporter would say, oh, wait a minute, prices are going up even more. I want to keep this rice, some of this rice at home rather than exporting it. So we're going to put on restrictions or whatever. And the next thing you know, you have 3 or 4 or 5 countries out there, major exporters, putting on bans. I might add Russia has been at the forefront of this, and currently they have export taxes on. And so, and Bill raised the prospects of them actually trying to control grain. Hopefully that won't happen, but I think this is a big concern. The other thing is, I think that you know, the flip side of that is on the consumption side. You understand why countries would do it, but it does kind of create a panic buying mode where everyone starts buying where they might have been buying 3 months ahead. You know, like what we saw in those pictures of Yemen and other countries, all of a sudden buying 5 months ahead or 6 months ahead. And we saw this back in 2007-8, and all of a sudden that starts lifting a lot of prices and getting people worried about, well, where are they going to buy this? And I think that to the degree possible, that hopefully we'll see more orderly marketings and more purchases as we move forward. And certainly better information will help that. I think the size of the winter wheat crop, as people begin to see sort of what estimates are of that winter wheat crop coming online, would certainly help ease that. But this, I think all bets are off if indeed we start seeing weather problems around the world. I think, you know, there's a lot of things here. The one thing I would get at, you know, we had a big food fuel debate in 2007-8, and I think that's going to come back. I think, you know, probably less so for ethanol, although I would myself would argue to suspend the mandates, but I don't think that actually would bring much more relief, mainly because fuel suppliers right now depend on ethanol as an octane enhancer, would continue to blend ethanol at, I think, roughly the same rates they've been doing it. Biodiesel, I think, is something different. And there, you know, we're talking about over 40% of the US soybean oil production goes into biodiesel right now, you know, at $1 a gallon subsidy with heavy mandates where we see RIN prices extremely high. I know this isn't necessarily the most popular suggestion, but I think that countries should consider suspending those mandates. You know, you have Indonesia with they up until just a couple of days ago had a 30% blending mandate in their own country on biodiesel. And in fact, because of the high prices that were because of the Malaysia typhoon that affected palm oil production, they put export bans on palm oil. So sort of the worst of all worlds that unfortunately really affect the importers of vegetable oils in places like India and other things. Again, not necessarily the most popular suggestion, but I thought I would throw it out there. I think on the other side, you do see a lot of food subsidies, and largely, you know, when you see high prices, you think, okay, demand should fall a little bit, and that's normally what we see. But when you're talking about food, particularly when you're talking about some of these countries that depend so heavily on food or on wheat, that I think, you know, you're going to see consumer subsidies. And I think everyone remembers the lessons of Arab Spring in places like countries in North Africa. So I think that you'll see continue to see consumer subsidies to try to keep Volatility prices or bread prices down and not see them skyrocket. I think they're best done if they're targeted towards those who need it most. I think wealthier families can certainly choose to or can source other foods, can afford to pay for higher food prices. But I do think, you know, in those areas we will continue to do it. I think the other big problem is going to be fertilizer, and there I think, you know, that's a tougher question because I think you want fertilizer where the productivity gains are the highest, but you know, I think to the degree possible, the market should be the one depending on that. And then lastly, just I think, you know, you are going to see more expenditures by the countries trying to protect their citizens through social safety nets and other sorts of things. Next slide. Oh, that's it. All right. Thanks so much.
Wonderful. Thank you so much, Joe. And a big thank you to all of today's panelists. And we are now going to kick off our question and answer time from our audience. And as a reminder, please remember to use the Q&A button at the bottom of your screen to submit your questions, not the chat, so we can monitor that a little better. Please also include your name and organization with your question. And the first set of questions that we're going to focus on are a bit specific to Ukraine. And so, Bill, perhaps you could help us understand a little bit better why is corn produced more in the north and wheat in the south in Ukraine, when in the U.S. it's roughly the opposite of that. And in addition to that, is Ukraine's corn production principally conventional, or is it GMO production predominantly?
Okay, let me start often with the last question. So the last question is corn production GMO? Well, that part of the world does not use GMOs, both Russia and Ukraine. And the reason is that they're linked agriculturally much more to Europe than they are to the United States and sort of the English-speaking countries. So the Ukraine and Russia generally have stayed away from GMOs. Like a lot of other countries in the world, they probably are experimenting with them or conducting research on them. But their production is pretty much GMO-free. And then the other question was, in Ukraine, it's wheat to the south, corn to the north. Why is that the case? I think the answer is that in the south, even though it's along the coast, it's drier, actually. It's the beginning of that steppe, which is good land. But the steppe is actually very similar to the Great Plains of the United States and the veldt of South Africa, one of these sort of natural grasslands. It's very good for wheat. But with corn, you need more moisture. So as you move up north in Ukraine, you get more moisture. And I think that's the reason why both corn and soybeans to some degree, when I made that map, you have wheat more in the south, corn in the north, and then sunflower seed was sort of in the middle. I think it's sunflower or corn more up north because you have more moisture.
Great, thank you, Bill. So Dan and Joe, a question about this really challenging situation of the combination of both higher output prices for agricultural commodities along with higher input prices. Dan, can you talk with us a little bit about what that might mean for farm profitability in the United States? And then Joe, can you also explain how this affects domestic households in developing countries a bit differently?
Right, Amanda. The latest USDA forecast that came out on farm profitability, at least for this crop year, we haven't got into the new crop exactly yet, but it's about $116 or $117 billion, if my memory serves me correct. We have been rising recently, and I expect that number to probably be $3 to $4 billion too low. I think as you look at hog prices that are record high, as you look at, of course, grain prices that have been improving, U.S. farmers will be doing better. The input side of things has been painful. I don't think anybody who's bought fertilizer or seed or chemicals, and maybe the biggest impact that I'm seeing on availability is on the chemical side, whether it be glyphosate or atrazine. Maybe those two are going to be tight in supply this spring. But, when you look at a December corn futures today that is at $6.65 a bushel, it kind of trumps the input side of things. And we're still looking at high margins. And so, assuming farmers get good yields, I think this is going to be a very profitable year for U.S. farmers as their prominence at the food table really increases. Joe, I'll throw it over to you.
Yeah, no, thanks, Dan. And I think for, it depends, developing countries is really going to depend. Price transmission, I think, is a real issue here. And I think that a lot of countries, even though global prices are real high, the price that a lot depends on how much trade there is within, agricultural areas within a particular country, particularly those countries that are more landlocked and other things where there's not a lot of, frankly, just not a lot of trade, or the intra-regional trade is a smaller portion of what, of commerce. So inputs are going to be really important for them. I think probably more important. Whereas I think for any country that has access to international markets, or where prices are being transmitted, 100% to international markets, I'd agree exactly with what Dan said. The profitability will be quite good. And also, I think the one of the big questions here is, okay, so what does it mean if there's less fertilizer used? I mean, you know, is this a direct link to productivity? Will we expect to see big productivity losses? I think, you know, in developed countries, you know, there's a lot of evidence that there's probably over applications of fertilizer and other things that, so I mean, I don't know, I'd be interested in, back to you, Dan, on this, whether or not you anticipate any productivity drops in places like the US or the EU. But I think in certain areas of sub-Saharan Africa, I would really worry about the fact that without subsidies, you know, in a lot of those, and some countries do provide a lot of subsidies on fertilizer purchases. You probably won't see much fertilizer applied this year, and I think that will probably have some ramifications. But this isn't where globally those supplies are coming from anyway. So I don't mean to discount it, because locally I think it's a big issue and could mean for, you know, that a country may have to import or whatever. But I think in most of the large exporting regions, I suspect that because they are getting high prices, they will continue to apply fertilizer.
You know, Joe, just one quick thing that I think was important is that when we looked at winter wheat fertilization programs across the plains, there was a diminishment of fertilization there as prices had not rallied yet. Of course, you had to fertilize by the end of February. So some of that nitrogen that didn't go down to wheat will now be transferred to the Western Corn Belt. And I think that'll be a help. So I'm like you, I'm not worried a lot about the upcoming fertilizer availability. I think we'll get by. And then the question is, how does a crop look, and do we put nitrogen down as we get into the pre-pollination stage, you know, that 28% or everything that a farmer would like. So back to you, Amanda.
That leads great to another question about fertilizer and, you know, global reliance on imports of fertilizer inputs. Is there potential, and what would need to happen to build domestic US capacity for fertilizer input production domestically, not just in the US, but elsewhere? You know, as we've seen consolidation in the fertilizer industry, what is their potential for greater domestic supply?
Well, let me start. You need minerals for a lot of it, and you're not going to get very far without it. I mean, nitrogen-based fertilizers, I think, is one thing, and so you know, natural gas is a major feedstock, although China does some with coal and other processes. But you know, I think, you know, we have seen more natural. I mean, the fertilizer production actually has come back here in the U.S. a bit, or nitrogen fertilizer has come back here in the U.S. But Dan, I don't know, or Bill, or if either one of you want to.
I would just say, Joe, that there's potash is an availability in the United States. There's some, you know, some new facilities looked at and coming online in that Salt Lake City area, where, of course, like a Mosaic, you can, of course, use brine to make potash. There's some very big opportunities there. Phosphate is what I worry about. You've got Florida, but the phosphate market is really where it gets tight. But I think nitrogen and potash do have availability. I don't know if you have any comment, Bill, but that's what I'm seeing, at least in my world.
Yeah, that's fine. I'll leave it to you guys on that fertilizer question.
So Bill, a question about Russia. So Joe mentioned the importance of having sanctions that can have an impact, but not focus on food and fertilizer, for example. And so there have been sanctions against Russia from the Western world that don't seem to have much of an impact at this point. Can you think of some potential sanctions not focused on food or fertilizer that might have a little bit more of a heft when we think about Russia?
Okay, I mean, many of the sanctions that have been imposed, though, are having a strong effect on the Russian economy. I mean, as I mentioned before, the general purpose of these sanctions is to cut Russia off from the international financial system and world trade. And for example, one way they're doing that, well, one thing that we did right away, and this is the goal, and we're trying to expand on this, is Russia has foreign exchange reserves of about $630 billion. That's fairly large given its GDP, which I mentioned before, which is less than $2 trillion. That was kind of viewed as their war chest. And of those $630 billion, what's happened is that the Western countries, US and the other Western countries, even the Swiss banks, have frozen the accounts of the Russian accounts that hold those foreign exchange reserves. So information I have is that about half of Russia's foreign exchange reserves, about $300 billion, are currently frozen. And the Western countries are trying to find that other half, but of Russia's $630 billion of reserves, about 20% are gold. And I don't know if the Western countries can target gold, but that's something that the West is doing, which is hurting the Russian economy. Then I also mentioned how, I mean, I'm not an expert on the SWIFT system. I knew hardly anything about it before this happened, but the SWIFT system, it's what the Society for Worldwide Interbank Financial Telecommunication, is sort of the mechanism by which, interbank transfers are made, which you actually mean the entities that trade ultimately has to involve an interbank transfer. And Russian banks are being cut off from that system. I even know that, or USDA knows that, in that entities that try to subscribe to publications put out by Russian consulting firms can't, subscriptions aren't being lost. Now you can't even subscribe to these products put out by Russian consulting firms. So that is having an effect. And that's the way by which we try to cut Russia off from world trade, as well as maybe even, ban it. I mentioned, though, that, this is just kind of a crystal ball gazing, that we tried to using SWIFT against these banks that finance Western trade, but we know that the Germans have been concerned about maintaining the continued imports of Russian natural gas. So the banks that specifically handle the importing of that transaction gas have been exempted from this SWIFT, bank exclusion. And I wonder, if we look at Russia's grain exports, particularly wheat, which go not to Western countries, but they go to, as has been pointed out, particularly by Joe, to these sort of middle income North African, Middle Eastern, Asian countries. I don't think it's in the interests of the West or anybody to try to restrict Russian wheat exports. So I don't know how they'll be affected by these SWIFT exclusions, but I think the West will try to make it see that they are not.
Yeah, I would just add to what Bill's comment. I think that for those big importing countries like Egypt, I think you're going to be talking government to government transactions. I don't think SWIFT's going to be a big deal. What I'm more worried about are little, small, medium enterprises in Turkey, a wheat miller or something that may be buying it. They may have trouble with those transactions. And I think what Bill has talked about of trying to exempt those, that might make some sense. I don't know how difficult it is to set up a system that's exempting some things and not others, however, so.
All right, so this also leads to another question focused on domestic production, food security, and resilience in domestic markets. So is there this sense that as countries may look to produce domestically and to rely less on trade and rely on trade as more of a supplement, how can that potentially be achieved without what Joe referenced, having this domino effect of export restrictions or other restrictions that impede trade? So how can countries try to focus on domestic production and food resilience without these distortionary policies? Joe, perhaps you could provide some insight on that.
Well, yeah, there's a couple things buried in that and let me try to dispose of one right away, and that's self-sufficiency. You see this back, people talk about, well, boy, this just proves that we need to be, countries need to be growing their own food. And I think that's a real mistake. And it's take a country like Morocco, which, by and large, year in, year out can produces a lot of wheat. They consume a lot of wheat. They do pretty well. They may import a little bit. This year, they have a tremendous drought. They have to be in the market. They're importing a lot of wheat to meet their needs. And a country like Egypt, you're talking about so many countries around the world which are huge net importers, and that there's just no way you're going to ever be self-sufficient. And if you do so, it's going to cost way more than it would if you were trading that. I think that there, frankly, yes, this is a big disruption. A war always is, but if you look at most of the major weather disturbances around the world, those are accommodated pretty well by the market. With prices are high, yes, but here, we're not really talking with wheat. I think there's going to be wheat. There will be wheat to move around the world to meet needs. It's just going to be at a high price here, and hopefully you can get these countries. It's terrible to think that you may lose production out of the Black Sea for several months this year, moving to market or longer. But I think that moving to self-sufficiency type of programs is a real mistake over the long run.
Amanda, let me chime in. It seems strange to me that Russia is always at the center of what I call trade restrictions and talk about export problems. We just have to go back to 1973 when we had the failure of the collective farm system. And I know Bill knows a lot about this, when the Nixon administration put an embargo on crops, which then facilitated our friends in South America to become in prominence. I think there's a lot to be said for being a reliable supplier. And I hope the United States continues to wear that crown with pride. We need to export grain. We need to export oilseeds. I will say my biggest concern as an analyst, though, is that our calculations are that the U.S. can export about 160 million bushels a week. That's a little over 4.3 million metric tons. After that, we start straining the logistical system in terms of elevations and other things. So we may be at that this fall as the world looks to our soybeans, to our corn, and to our wheat all combined. And I worry that we may not be, the pipe at the export facilities may not be big enough. And so it's something to think about going forward. That would not mean that we are not a reliable supplier. It just means there haven't been enough investment in concrete and other things made over the last couple of decades.
Thanks, Dan and Joe. And so that leads to another question about the ability to fill this gap. So that was talked about a little bit kind of throughout all these presentations, this shortfall of really important ag commodities from the Black Sea region. Along with the US and some infrastructure challenges in getting grain around the world, how much can the US make up for that shortfall? And then are there any other smaller suppliers that we anticipate to maybe ramp up production who collectively might be able to help fill more of that gap? Perhaps Dan, you could start with that.
Well, I mentioned India, and nicely right now, Brazil is exporting some of its wheat crop also. So that's been of help nearby. Brazil is not normally an exporter of wheat, so it's glad to see them stepping up here a little bit. I would imagine Australians with good weather will continue to export to their maximum capacity. And of course, Canada would be right along with us, except they endured a very bad drought last year. So, Europe is talking about allowing fields that are fallow to be planted this year. It's a discussion in Brussels. So the world's trying to get its arms around this. You've seen in the press people talking about the release of CRP. I think it's too early to talk about it for this year, but maybe next year that's something we can all discuss, maybe reducing penalties. But a lot of that depends, as I said beforehand, the duration of this war, the duration of the conflict has a big impact in terms of global food supplies. The longer it goes on, the worse it becomes, particularly if it happens for wheat in that July through September timeframe.
Yeah, I would just add that, particularly for wheat, I mean, you're talking 60% of the wheat in the world is fall planted Northern Hemisphere winter wheat, and not a lot can be done right now except for hope for a good crop. And unfortunately, we see the West is pretty dry here in the US. It's still dry up in the plains in Canada. So hopefully we'll see sufficient rains over the next couple of months to see, a good crop. China too, also important in this whole discussion, even though they, the real question there is whether or not they're in the market big for imports and things like that. They don't typically export much. But then you're talking spring wheats, and U.S. Okay, we got about 15%, 11 million some odd acres that normally are planted. I just don't see much more coming in. To Dan's point, you could release some out of the CRP, but you wouldn't have time really to plant it this year. Canada, the problem Canada faces the same problem the U.S. In those wheat producing areas. Corn prices are high in the U.S. and soybean prices are high, and in Canada it's canola. You know, canola is just, I mean, canola is really sort of more replaced barley in Canada, but it's still, the wheat area just hasn't moved very much. So I don't think you're going to see much response out of North America. And then you're talking about Russia, you know, which has a sizable spring wheat crop, and places like Kazakhstan. You know, it's just, there's not a lot of areas. But as Dan mentioned, so too the Southern Hemisphere comes in around the same time, would be harvesting by. But really, so you're talking about that supply response not really hitting the market until the end of the year. So I think, you know, this is, the world is really going to be looking at crop conditions, I think, very heavily over the next 2 or 3 months for the winter wheats. But spring wheats, I mean, a lot we'll see. I don't think a lot would come out of idle land out of the EU again. I mean, again, maybe for fall planted wheat, since most of that is fall planted wheat anyway. I think 95% or so, at least historically. So, you know, it's just you know, things like corn. The nice thing is you got a Southern Hemisphere, you have a Northern Hemisphere, you know, soybeans, you have offset in one, you know, Brazil's right. If the US has a problem, Brazil's right in with increased plantings but wheat's a little trickier, at least between, you know, only 40% is, the crop is really, right now is what's going to be the focus is planting times at spring wheat.
Hey, Joe, could I ask you a policy question that would help? You know, the U.S. won a WTO case against China going back to its entry into the WTO, which mandated it imported a little over 9 million tons of wheat. And China does not really need the wheat, as we know, if you believe their stock totals. Is there a way the world could relent on China's WTO for 1 or 2 years? Is that a policy option or not?
You know, I think as far as most of those import quotas, I mean, they're not necessarily binding, right? What you have to show is that they should have imported wheat, but they didn't, right? Is so if, you know, I think the main thing with China is transparency and the fact that you have allowed people access to import if they want. What I fear is that China will still want it. Wheat prices in China I've been told at least, are even higher than they are on global markets still. So, you know, to the degree that there's still pressures to import. And I don't know, Dan, you may have seen the most recent trade numbers out of there, but as far as I can see, they were still importing a lot. You know, and so I think that's something to watch. The China ag minister made a statement, I think, a couple of weeks ago, saying that the winter wheat crop was in terrible shape, but I think it's way too early to make much prognosis about that. They were a little bit delayed because of flooding last year, but if you look at the satellite images and the forecast by, you know, some of the crop forecasters, all of them seem to think, well, right now things look fine. The posts out of Beijing for USDA are saying that the crop still looks favorable. So we'll see. I mean, all these things, you know, again, we got a lot of, I think, pretty tense weeks in the near term just to see how crop conditions are progressing.
Great. So this leads to, you know, reflections of food price spikes a little more than a decade ago. And I think Joe and Dan both talked about how, you know, one of the key differences between that time frame is that US exchange rate was relatively low at that time, and now we have higher exchange rates. How similar is the rest of the picture now relative to what it was then? And are we expecting hunger in the Middle East, North Africa, for example? Joe, perhaps you could start with that. And then Bill, if you could also talk about some of the expectations for the impacts on the Ukrainian population as well.
Well, okay, so I'll begin and just, if again, and I'm abstracting away from the horrors of war and everything else, but if you treat Ukraine as a huge drought in the world, right? Saying, okay, we'd be off by this, this amount of grain is not going to make it to the market. You know, we're talking about similar sorts of things that we saw in 2007, 8, or 2010, 11. I think even more extreme if you start pulling in Russia, obviously. But you got to remember, we went into those years, both 2007 and then also 2009, 10. We went in with actually pretty high wheat stocks, or much higher wheat stock. Even between 2008 and 2010, 11, we rebuilt global stocks a lot, and we're going in very, very tight to begin with. And again, if Dan's right, and that we're actually talked about not a lot of wheat coming out of Russia either. This is going to be very, very tight. Again, I think these countries, in these big wheat importing countries, are going to pay for wheat. We're going to draw down world stocks, and come out of 21, 22, or 22, 23, even tighter than we went in. But it's going to come out of the pocketbook of somebody, and that's probably going to be these governments that are going to try to keep bread prices and other things down. Because I think otherwise the lessons are pretty clear. We had food riots in 2007, 8 in a number of countries, but then 2010, 11, all those countries across North Africa had political. Tunisia, Egypt had big political problems. So I think the lessons there is the governments will want to avoid that and subsidize. And already we're seeing food price subsidies come out or increase. We just put a blog out on Egypt just the other day on the website. Sorry, shameless plug there.
So Amanda, do you want me to, it's a question to me, might Ukraine itself also, or its population, face food shortages? What are the consequences of this for food consumption in Ukraine? Okay.
Right.
I don't anticipate a problem in Ukrainian food consumption just based on availability of food supplies. Because Ukraine, it is an agriculturally rich country. It's a big grain exporter. It's also fairly self-sufficient agriculturally. That is, it imports very little agricultural goods. I mean, it imports high-value products, fruit and vegetables that doesn't produce, processed foods from Europe, as does Russia. So actually, its import bill in value terms might look high, but on the basics, for example, grain to produce bread, even sunflower seed oil, a livestock sector, it has a big livestock sector. It imports very few livestock products. So actually, I don't think that the Ukrainian population is in danger of serious food shortages in the supply sense. Of course, prices go up. The issue for Ukraine will not be overall supplies, but just distribution. If there's so much mayhem, and if just particularly in a scenario where, let's say, Russia and Ukraine each control parts of the country, there's insurgency. Just it's not so much the primary agricultural economy will break down, but the whole commercial system might break down. And that's a vulnerability, as well as in the very short run, if cities become besieged, is a whole different matter. But if cities become besieged, surrounded and besieged like Mariupol in the southwest, because it appears that actually a Russian military strategy might be, rather than taking these cities with very large populations, which might not actually be feasible, you surround them and starve them out. Get the military forces to surrender just because basically the cities can't be supplied anymore.
All right. Well, it's comforting to know that there are supplies available, and hopefully there will be adequate distribution in the coming months. And again, hopeful that this doesn't continue too much longer. Along with that, this brings up the topic of food versus fuel. That was something that was mentioned a few times today. The challenges related to food security and consumption needs, as well as global objectives related to climate and the environment. How do you think this current conflict may affect some of the policies associated with climate smart and environmentally friendly policies, for example, relative to using food for consumption rather than fuel? Dan, perhaps you could start with that.
Well, I think Joe and I both believe that debate is going to be held at some point, and renewable diesel is, there's another 3 plants coming online in the next couple of months. They've been delaying it because of the high price of soybean oil and some of the vegetable oils, but at the same time, we need more of everything. We need more energy. We need more agricultural production on this side. I don't see the Biden administration backing down on this at the moment. But as we get into this debate, if this war goes on for longer than all of us would like, I'm sure this will come up. However, you know, it probably is another administration that will have to decide this debate. I really don't see Biden changing from his green fuel posture as it sits today. But again, if the world becomes hungrier, it's something we'll all discuss and debate going forward. Joe, I'll turn it over to you.
Yeah, no, I would agree with that assessment. I think, you know, I think the Secretary of Agriculture was just out last week talking about the benefits, or was talking to the biodiesel or some biofuel forum, saying the benefits of agriculture for you know, energy production. Yeah, I guess, you know, as far as ethanol is concerned, again, I think you know, there's certainly a debate on the environmental or the climate benefits of ethanol, but I think more importantly right now, the system is sort of adopted to it, and you know, it's a low cost octane provider, and I just don't see them changing that. I mean, I don't like mandates in the sense that I think that the market should choose that, and with oil prices as high as they are, ethanol continues to be fairly profitable. I think biodiesel is kind of a different story in the sense that you wouldn't be producing it if it weren't for mandates and you know, $1 tax credit. And to me, that just doesn't make sense in an environment where we're seeing vegetable oils go through the roof. But I know my email will be full of people talking about how we need this for energy self-sufficiency and blah, blah, blah. But, you know, to me, food sort of trumps that, but that's my view.
All right, thanks a lot. So we have time for one last question, a little bit of a lightning round for all three of you. So again, this is an incredibly challenging, difficult topic with lots of volatility. For each of you, the question is, if there's one bright spot that you can pick out, for Dan with respect to the US economy, for Bill with respect to the Black Sea region, and Joe for global food security potential, what's one bright spot that you would like to point to? We'll start with Dan, then Bill and Joe.
Well, in terms of the U.S. economy, the U.S. farmer has become more important. He will be looking at the potential of record large farm income. We think in the 2022-23 crop year, the importance of him is for the world, and feeding the world has never been higher that I can see looking backwards to World War II. So it's really imperative that he stand up if Mother Nature allows him to produce to his capacity. So I think that's positive for the U.S. economy, and somewhere along the line, he will be part of the solution for keeping inflation down, but it's just not yet. It'll be when the new crop is issued.
Okay, well, I'll speak next. And this one bright spot, even this is kind of mitigated, has to deal again with the overall war. But I'm not going to answer just with respect to the war, but Ukraine has put up a stronger resistance than, you know, I think military specialists throughout the world anticipated. And the bright spot for that, of course, from the larger picture, is Russia might not succeed in conquering all or most of the country. And the hope then is that this leads as quickly as possible to a negotiated peace. Because of those three scenarios I established, you know, basically Ukraine maintains control, negotiated peace, probably the best outcome. Russia conquers it. That's not good geopolitically, but the worst outcome might be, at least in terms of the agricultural sector and disruption in the food economy, is if it's half and half, or the fighting goes on for a long time, there's insurgency, then I mean, it's going to be very bad for the Ukrainian population and very disruptive to the country's foreign trade. I mean, there basically might be nothing come out of Ukraine if Russia either controls the entire Black Sea ports, but is not at peace with Ukraine, or is blockading those that doesn't have it. So I'm not saying we should wish for Russian conquest, but the bright spot is the hope that, given the challenges the Russian military has faced in taking territory, particularly these big cities, that will lead to a negotiated peace that will leave Ukraine largely intact, and maybe to a solution of that particular geopolitical problem?
Yeah, I think for the global food security, rice market looks good. And I think that, you know, again, I think I pointed out that rice stocks are at the highest level in 20 years, and prices have been fairly moderate. Now, again, it's a pretty distinct market in one sense, but there is some, you know, substitution for broken rice in the feed market. And so you could see some things there. And I think the wild card is fertilizer and what, you know, higher prices for fertilizer may have for rice production. Hopefully, though, we'll see, sufficient rice, that those forecasts for good production this year in rice continue. Otherwise, I think that could really start to panic, one section of the world where they import wheat and things, but, you're talking rice being the major staple.
All right, thank you to all three of you. So that concludes our time for questions. I want to, again, enthusiastically thank our three panelists for their tremendous insights. And on one last positive note, just to highlight that American agriculturalists are resilient and poised to tackle the challenges faced today and what is to come. So Martha, thank you again for the opportunity to facilitate this fantastic discussion, and I will pass it back to you.
Thank you, Amanda, and thanks to all of our speakers for the insightful discussion today. I'd like to also thank all of you in the audience for joining us and submitting your great questions. We appreciate your engagement with us and we'd love to hear your feedback. So please take a moment to share your comments about today's session in the brief survey you will see at the conclusion of this forum. And also please save the date for next month's forum on April 12th, which will be on solving barriers to agricultural carbon markets. If you'd like to help us continue providing valuable programming such as today's forum, I'll quickly remind you about becoming a friend of Farm Foundation. Check the link provided in the chat to learn more. Each and every gift to Farm Foundation strengthens our ability to address rapidly evolving issues impacting agriculture, the food system, and rural communities, and we are grateful for your support. Thank you once again for joining us today, and we look forward to seeing you at future events.